Good morning, everyone. Welcome to the Macro Snapshot. We are Thursday, August the 7th, 2025. Okay, so let's have a quick look and see what's going on. The main thing today, we just had some news about 20 minutes ago from the Bank of England. So they cut, which was expected, they cut down to 4%. But what was interesting is that the consensus was for a 7-2 vote. So a vote, strongly majority vote in favor of cutting. But as we could see here from the headline, it was actually a 5-4. There was a 4-4-1 split on the first vote. They had to do another vote. So it was 5-4. So the point is here that there were quite a few people for, I don't want to say dissenters, but for people who on the monetary policy committee who basically disagreed with cutting. So as Bailey says here in the headline here on Bloomberg, says decision to cut rates was finally balanced and future cuts need to be made gradually and carefully. So just having a quick look through this statement as well, it's basically the Bank of England have revised upwards their a sort of inflation forecast. And so the market's taken that a little bit sort of hawkishly, or at least kind of conservatively. And just here on a 3-minute chart, so short-term chart here on the UK gilts, so the 10-year, you can see here the gilts sort of coming down just on the news at 7 o'clock, and they've just come back a little bit. And we also see that the pound on the initial information basically went up a little bit. Here you see the pound had a bit of a spike up, now coming up a little bit. So interesting to see if the pound continues to gain throughout today's trading session. And I think that's important, not only in terms of the UK, but just in terms also of what's happening with central banks, that they are concerned. The BOE in the statement was saying that they are a little bit concerned about the economy going forward. But of course, there's the inflation forecasts were revised upwards. And I think we're going to see with the Fed the similar kind of situation that, they do have some concerns about the economy, but inflation definitely is looking sticky. And we saw that on, was it Monday, with the ISM services, where that prices paid component was actually pretty high, but everything else was indicating maybe possibly even a slowdown in the economy. Now, talking about the Fed, let's just have a look and see where we're at with the pricing. The pricing has remained fairly confident still that the Fed will cut at least twice by the end of the year. And just this morning, as I say, looking at this, where we're at the moment is 60 basis points. So we're just over, as you can see here, for December pricing, about 2.4 cuts. And the point I'm trying to make is that after the big payroll shock on Friday, you can see that in the last 3 trading days that the market has given back a few basis points, but is essentially just trading in a fairly quiet range. I mean, we are in August, so a lot of people are on holiday, but we are nonetheless trading in a range, and the market hasn't really repriced that sort of more hawkishly. It's still well above the 50 basis points, which is 2 cuts. So the market's still thinking that, and also thinking that possibly in September, October, there could even be other cuts. So it could even be 3 cuts, some market participants are saying. And this was given a little bit, you see here yesterday, the pricing went down about 4 or 5 basis points. And that was on the back of some comments, I think, from Cook, who's a voter, Lisa Cook, who's a voter on the FOMC. And she basically said that, job revisions, with such large revisions to the job numbers, was often indicative of a market which I think she used at an inflection point or a pivot point, a labor market which was about to turn. And so she was a little bit sort of negative about the labor market, and the stir market here took that as meaning that she was potentially on board for some cuts. And she did mention that along with a couple of other Fed members. So definitely the Fed, it looks as though internally there's a little bit of communication slowly turning towards, a slightly more dovish stance, or at least a stance which is a little bit more open to the Fed cutting, as I say, a couple of times this year. In terms of other stuff, we do get Bostich today speaking, so let's see what he has to say. In the past, he's been when I say the past, I mean the last year or two, he's been relatively hawkish and definitely wanting to fight inflation. So I'm quite curious to see today whether Bostich, sort of turns his playbook a little bit and starts talking about the fact that the labor market is showing signs potentially of weakening. We shall see. In other news about the FOMC, it seems that Trump is maybe leaning more towards sort of announcing his nomination sometime this week. So either today or maybe tomorrow or the weekend for saw that vacancy left by Adriana's Kugler's resignation the other day. But it seems that Trump, rather than sort of trying to get through someone permanent, he could nominate someone just on a temporary basis, which would give him a bit more time to think about the chair, the head of the Fed, the chairperson. So that's going to be quite interesting to see if there's any more update on that. Now, talking about Trump, of course, not a day goes by. And now the new thing last night, you probably saw, but he basically, I'm just going to put this back onto daily charts here. He threatened 100% tariffs on any sort of chips and semiconductors coming into the US. So technically, this could be a big problem for certain companies, but already certain companies, like ASML and TSMC over in Taiwan have been exempted. There's also some talk that Apple might get some exemptions, that there might be some kind of carve out for their iPhones being made in India. So there could be all sorts of exemptions, but nonetheless, that's not great for a lot of companies, which it's ordinary companies which need to get their chips. But as you can see, the ES is unfazed by that, and overnight the futures are pushed up a little bit. If we have a look at Nasdaq, also up a little bit. So there's a sense here that there will be some carve outs, there will be some compromises. But medium term we'll have to see. The other thing which I'd say as well is that some of this sort of positivity in equities, and again, just going back to the ES, is also on news that apparently there's going to be a meeting within the next week, some kind of summit between Trump and Putin, with an eye of trying to, I mean, in Trump's terms anyway, of getting some sort of ceasefire or whatnot over in Europe in the Ukraine conflict. And you can see here, if I could just go onto the FXXP, so the Euro Stock 600, you can see quite a strong green candle. So I think here what we're seeing with the equities is a bit of a mix with the news about sort of potential sort of 100% tariffs on chips and semiconductors coming to the US, but that's being sort of contrasted with a little bit of optimism about a potential ceasefire or the beginning of negotiations for a ceasefire between Ukraine and Russia, which no doubt all of Europe would welcome, as would, of course, probably the rest of the world. So let's just keep an eye on what's going on there on the geopolitics. Now, in terms of also those geopolitics with Putin and Trump and Zelensky getting involved as well, you can see that oil actually has been a little bit weak. So the idea here is that maybe there won't be sort of sanctions on oil after all, and that actually Russian oil exports will not be banned or sort of made problematic. There was some talk about putting more sanctions on Russia's so-called sort of a shadow tanker fleet. So basically they have a whole suite of sort of oil tankers which are sort of registered to different domains and whatnot. Anyway, long story short, possibly less pressure in terms of sanctions on the oil market. And so we see here that oil is still under pressure. And this is a pretty key point here, because you can see here at recent sort of lows going back to the mid to late June price of about $64. And you've got to say here, let me just put on some moving averages and whatnot. Let's have a look. So as you can see here, sorry, that's the simple moving averages. I prefer the EMA. So let's put on the exponential moving averages. So you can see here on the EMAs, all the short-term ones, the 20s and the 50s, even the 100 here, we're well below those now. So at this point, the oil market is losing technical support. This is a pretty key level. As I said, this 64. If we break below there, as I was saying last couple of days, there's probably sort of stops being run here. A lot of people probably have their stops being triggered. If we break below there, we could see the oil market puke down a little bit more. I suspect that there will be some support down in the late 50s and early 60s, but until and unless I mean, if we continue to see positivity in negotiations in Ukraine, we don't see any further sanctions, and we're continuing to see OPEC Plus ramping up production. You've got to say that these are all negatives for the oil market, at least short term. On the other hand, we saw that inventories yesterday in the US were down. I think it was about 3 million barrels in the US, and overall the global economy is reasonable. It's not strong, but it's reasonable. So you could argue here that oil, there might be another downside for maybe $1 or $2, but I think ultimately buyers will probably come in and bargain hunt down here somewhere, maybe in the early 60s, very late sort of 50s down here. And again, as I was saying yesterday, the closer we get below $60 in the US space, the more problematic that is for some of the producers who are relatively high cost producers. Producing at those levels, those prices do not produce profits, and they actually reduce their production, which of course is a positive medium term for the oil market. So that's an interesting one to be looking out for here in oil. In terms of some other stuff, just want to look at the bond market here. We had just looking at the not the yield, quite stable really. If you look at the 2-year, as I was saying yesterday, not a huge amount of action. And again, looking at the SOFRs and then the pricing, the market still believes the Fed will cut. So at the front end of the curve, not a lot of action. What we did get yesterday, we actually had a fat finger. It was a little bit weird. There were like 300,000 contracts went through just in a couple of minutes. Some people are saying that maybe there's an intern on the trading desk in the summer holidays or something. But massive volume went through for no apparent reason. No one's owned up to a fat finger or anything like that. So curious, there was a bit of a sort of a mini flash crash yesterday about 11:30, but the market's recovered and we're just here, as you see, trading around the 200-day EMA. What is interesting is that yesterday on the 10-year, and here's the 10-year here, we did have a fairly negative auction with fairly low bid to cover metrics and also low indirect demand. So demand from foreign entities, maybe foreign central banks, it trailed by over a basis point. So that was the worst result we've had in bond auctions for the 10-year for quite a while. So today at 1 o'clock, we have the 30-year, and that's always the most difficult to digest. So it will be interesting to look at the 30-year, and here's the ZB, just to see if there's some kind of price concession, if the market, pushes down the price just leading into that 1 p.m. deadline, just to try and, grab a few extra sort of basis points of value there. So as I say, the market will definitely be looking to see whether the indirect demand, the bid to cover is strong in the long end, or whether this is a sign of indigestion and that, global capital markets are not really that excited about long-term bonds. And remember, there are some headwinds for the long-term bonds in the US, as I was saying yesterday, potentially still sticky inflation. If there is a slowdown in the economy, you could argue that's good for the long-term bonds, but that slowdown also will necessitate more issuance to pay for social security programs and also less sort of tax income and less tax receipts. So, quite a lot of issuance still happening here. So definitely the long-term bonds under pressure, and we'll see, we'll be able to gauge that at 1 p.m. today with the auction. So curious to see how that all goes. Some other stuff, we also have today some data this morning. Now, this is going to be very interesting. We have initial jobless claims, and that will be interesting. Let's have a look. That's going to be interesting just to see in the context of what happened in the non-farm payrolls. And remember this whole idea of all the labor markets starting to crack, and there were huge revisions, et cetera, last Friday. So here we have the initial jobless claims. Again, the market is the consensus is for just over 220,000, which is showing a very, very, very strong labor market. So absolutely no problems here. So, I think really until and unless the initial jobless claims starts heading up to, 240, 250, 260, 270,000 on a regular basis. So it would have to be looking at the 4-week moving average. And as you can see, the 4-week moving average here, because it is a slightly noisy number, the 4-week moving average at 221,000 is still indicating a very strong labor market. So I personally think the jury is out until we get these more timely measures showing more weakness. We also will have the continuing claims. That's expected to be up, and just another few thousand. We shall see. Continuing claims is interesting because, as I've said a few times, continuing claims could be indicating that people are being fired, but but there's not so much that people are being fired, but the companies are not really employing new people because they're sort of still worried about the economy and tariffs and those kind of concerns, and it's taking longer and longer for people to find new jobs. So if the continuing claims are those that will give us an indication of how difficult it is for people who have lost their jobs to actually find a new job. So let's keep an eye on that. We get the New York Fed 1-year inflation expectations. The other, which is interesting, as we see what the New York Fed is thinking about 1-year inflation expectations, still over 3. And of course, we know that the main Fed based in Washington does just want this, of course, down at 2%. So that's going to be interesting. And one which I'll be watching as well is the unit labor costs. So unit labor costs, I think is this the preliminary number here? Let's have a look. Yeah, the preliminary number. So the preliminary number for unit labor costs, and again, this is an input into inflation. So this is the cost of, labor, obviously. So that is expected at 1.5, so less, quite a significant number less than last time. So let's keep an eye on that. Remember, the Fed will be looking at that as one of the inputs into its views on inflation. So the front end of the curve, the bond market should be looking at that. I'm just seeing there's a few more headlines just coming out a couple of minutes ago. Percent, something wrong when Fed doesn't cut, then jobs revised. Cleaning up BLS should have been done long ago. In terms of the BLS, this was long overdue. Trump has great reverence for Fed as an institution. You could have convinced me. Besant, Trump has said he's not going to fire Powell, et cetera, et cetera. Okay, so not a huge amount. It looks as though, keep in mind that the Bureau of Labor Statistics was the person who was fired, the head of that. So apparently Trump will be announcing a new person, a nomination for that in the coming days. We'll keep an eye on that. And again, just looking at Bailey's comments, more risk to the downside on activities. But risks to inflation shifted to the upside from Governor Bailey of the Bank of England. So again, this conundrum which most central banks, or a lot of central banks around the world, are facing is that inflation remains sticky, but it could be that the employment, the labor market is weakening and the general economy is weakening. So they're starting to get trade-offs between the mandates of full employment and controlling prices, and we are starting to get potentially into a bit of a stagflationary environment. So that's something to keep an eye out for. Okay, guys, I'm going to leave it there. Let's look at the data at 8:30, see what's going on. Also, there could be some information about a new person on the Fed and the new head of the BLS, the Bureau of Labor Statistics. And of course, in terms of the oil market, I want to keep an eye on what's going on with Putin and Zelensky and our friend Trump in terms of potential ceasefire over there. Okay, thanks very much. Have a great day, and we'll keep this going tomorrow. Thank you.